Okay guys, it is time for a new update here on the Bitcoin price, and as you probably can remember, we talked about this falling broadening wedge in our last video. We broke this to the upside. We have reached the target by far. It was a very good decision to close some of our short positions. As you guys know, we were in a short hedge position. We took out $30,000 of profits out of this position and placed our stop loss in a profit when we saw this falling broadening wedge, a bullish reversal pattern developing in the charts. The question now is, after Bitcoin pumped so aggressively and even above our daily upward sloping resistance actually with today's daily candle, is it time to expect Bitcoin to now finally reach price levels of the $32,000 level where our 11-year long weekly support and resistance is? Guys, we are going to talk about that because I am actually planning to potentially open up another short hedge position if we are not holding very specific price levels within the next 24 hours, but especially until the next weekly candle close, which is going to occur in 3 days. Because as you guys know, we are still remaining in our swing long positions. Here, our most risky swing long position with an entry at $21,000. I mean, it is right now well above $100,000 in a profit. And guys, no, this position was not opened with the ATX leverage, but as you guys know, you can scale up positions, put up the leverage to a higher leverage in a later case when the price already moved away from your entry point, and with that you then can take margin out of that trade again and use that, for example, for other positions, especially if you want to make sure to not have too many funds on an exchange at the same time. But now, guys, let's not only talk about the smaller time frames, let's also talk about the bigger time frames today, because it's always important, especially when making a decision if opening a swing long or is it still time to open short hedge positions, to have a good and big market overview of what is happening and what is to be expected in general over the next couple of months, actually, not only couple of hours or couple of days, what we are going to do anyways on the smaller time frames. As always, I really appreciate the support under my last video. Thank you very much. As always, I would also appreciate it if you would smash up a like here on today's video. Don't forget to subscribe, activate the bell, and now let's jump right into the charts, because as you guys know, as I just told you, we have seen a very nice breakout out of our falling broadening wedge on the 4-hourly time frame, and we actually pumped above our daily upward sloping resistance here. As you remember, we opened a short hedge position here after getting rejected from that resistance, and I'm planning to do the same thing over here. If in the next 12 hours our daily candle doesn't remain above the $24,300 level and we are getting sold off back below resistance, then this would definitely be a very beautiful fake out here for Bitcoin and would definitely signal that there is a high chance of us correcting all the way down here to this upward sloping support again, at least, which then could lead to a M pattern and we could fall even lower. So if we are not able to hold above this price level, I am going to open another short hedge position, probably with around half of the profits we took out of our last short hedge trade. I don't want to put everything in again, since just this time the charts are looking a lot more bullish, and we don't have such a safe bet as last time when also there was bearish news with Binance and BUSD coming out, although all that drama has already been solved. Nevertheless, we don't have that here, so I definitely don't want to go as deep into a short hedge as the last time. So let's just keep an eye on that. But most importantly, even if we are holding above this resistance today, it's more important that we are actually staying above that for the next 3 days. So we are not going to open a short hedge, but important is that we are able to close our weekly candle above our $23,400, $24,000 level, just because, as you know, we have been talking about this big falling wedge here on the weekly time frame also for quite some time. We broke out of it. We saw a retest, right? We saw a retest of the past resistance, and to really confirm a breakout, we want to see a following candle after the retest to close above our old high point after the initial breakout. And this would only happen if our weekly candle is able to remain above the $24,000 level. So this is the most important close for me in the next 3 days, because if this happens, actually our weekly time frame has seen a bullish confirmed breakout, and the likelihood of us then potentially rallying up all the way to the $32,000, $33,000 level, where then our 11-year resistance and supports come in, is actually rather likely. So in that case, we definitely don't want to open up a short hedge. We don't want to be exposed to any short positions at all actually. We only want to use that opportunity in 3 days to then eventually scale up our swing long position here once again. But now, before we get all too bullish, let's wait for our daily candle today to close, because I know it almost feels like we are in the next parabolic move for Bitcoin. But we need to keep something in mind here, and that is that comparing the 2015 to 2016 pretty much bear market with our current bear market, we can see that there is some similarities. The only big difference is that after we saw the initial bottom for our bear market in 2015, we retested that bottom actually 3 times before being able to really go into a massive parabolic run again. So the likelihood of us now just pushing to the upside and seeing the next parabolic run after only retesting this support a single time is not super likely. But since the market is a lot bigger than back in the day, we have a lot more big players like Binance and others not being interested that Bitcoin reaches this price level here again at all. It might be that things change a little bit, but we need to keep in mind that the next parabolic run will still need a little bit more build up. So right now it's still not the time to just always scale up the long positions aggressively. Right now it's still the time to be aware, and on a bearish break or a bearish close, it's still a good idea to actually be prepared. That's not financial advice, but to be prepared with some hedge short positions. That can never actually go wrong, especially if you are exposed to swing long positions like most of you guys out there anyways, since the $16,000, $14,000 price levels, or even maybe a little bit higher, which doesn't really matter at the price levels we are at right now. So let's keep that in mind. Another thing that would be looking very, very good if in the case that our weekly candle now closes above the price levels I just mentioned. I want to show you something very nicely here on the daily time frame, not the log scale, the moving average, the 50 and the 200 daily moving average. And what we can see here is that in the past we have seen very, very aggressive rallies once the 50 moving average crosses back above the 200 daily moving average here on the not log scale. And the only time this didn't really work was right here when we saw the massive corona dump, right? This was a black swan event, so we can forget about this cross. It doesn't really count. But if we're just looking here in general, every time when we saw this bullish cross on the daily timeframes, we saw a massive parabolic run. Even here in the meantime, when we saw our first big correction of our last bull run, even here, when the cross came, we again saw a very aggressive and parabolic run to the upside. And what is happening right now? Yes, this cross is occurring once again, and with a bullish close on the weekly time frame, a relatively aggressive continuation of this pump all the way to our $32,000 level, where our 11-year resistance is on the weekly time frames. As you guys know, I mean, I just showed you it right here, the red line. This is our next most important resistance on the weekly time frame. I mean, it is very, very clear with the combination of the daily cross that if we are now not failing to close bullish here, $32,000 to $30,000 is actually then our next price target. And I will make sure then, when this weekly candle closes bullish, to scale up my swing long position once again to be prepared for this upside. But now, guys, let's wait for our daily candle. We don't want to get too bullish till all of this has resolved itself and we can be assured that the weekly candle will close bullish, because things could already change till the end of the day, especially if we're getting rejected here below the $24,300 level. But now, guys, we are going to see us in the next video. I hope you enjoyed this video. Please smash up a like, don't forget to subscribe, activate the bell, and yeah, we are going to see us in the next one, guys. Maybe tomorrow, maybe in 2 or 3 days, depending on once relevant information is seen in the charts again, and once I am making a decision again for my next trades. I will let you know in advance, as always, so don't forget to subscribe, activate the bell, leave a thumbs up. I also appreciate every single comment, and now we're going to see us in the next one. Till then, bye bye.